For nearly a century, the world has trusted one thing above all else: the promise that when America borrows, it will always pay back. Every nation, every bank, every investor from Tokyo to Riyadh to Zurich holds that belief deep in its balance sheet. The US dollar isn't just money, it's the foundation of the global economy. But what happens if one day the world says no, no more lending, no more trust, no more faith in America's debt? To understand that question, we have to go back to how this system began. After World War II, the world was in ruins. Europe was shattered, Asia was rebuilding, and the United States emerged as the only major economy left standing. It had gold, factories, technology, and military dominance. At the Bretton Woods Conference in 1944, 44 nations agreed to make the US dollar the center of global trade. Every other currency would be pegged to the dollar, and the dollar itself would be pegged to gold at $35 an ounce. That was the birth of the dollar system, a world where America's currency became everyone's reserve. But in 1971, President Richard Nixon broke that link. The US no longer had enough gold to back its money, and global demand for dollars was exploding. Nixon closed the gold window, ending the convertibility of dollars into gold. The dollar became fiat, backed by nothing but faith in the United States government. Many predicted chaos. Instead, something extraordinary happened. The world didn't abandon the dollar, it doubled down on it. Because there was one thing the US had that no one else could match: the Treasury bond. A piece of paper, or today a line of code, promising that the US government would repay its debts with interest. It became the safest asset on earth. Central banks bought it, corporations bought it, even foreign governments bought it. The more America borrowed, the more the world wanted in. Why? Because every country needs dollars. Oil is priced in dollars. Global trade happens in dollars. And the easiest way to hold dollars is to hold US debt. This system created what economists call exorbitant privilege. America could borrow from the world in its own currency. It could run massive deficits, print more dollars, and still have everyone calling it safe. If another country did that, its currency would collapse, but not the United States. It was the world's banker, the issuer of the global reserve, the only debtor everyone trusted. For decades, this arrangement seemed unbreakable. Even during crises, the 1987 crash, the dot-com bust, the 2008 financial meltdown, money fled to US treasuries, not away from them. The worse the global panic, the stronger the dollar became. It was a paradox. The more debt America issued, the more the world demanded it. But today, something is changing. The United States owes over $35 trillion, more than its entire annual economy produces. The government runs trillion-dollar deficits year after year. Interest payments alone are approaching the size of the entire military budget. And for the first time in modern history, the world is beginning to ask whether this is sustainable. China, Japan, and Saudi Arabia, once the biggest foreign buyers of US debt, are quietly reducing their holdings. The Federal Reserve has become the largest single buyer of treasuries, effectively lending to its own government by printing new dollars. Meanwhile, countries like Russia and China are pushing for trade in other currencies: yuan, rupees, even gold. The de-dollarization movement is small, but it's growing. And behind the scenes, nations are asking, what happens if America's debt machine finally stops working? To imagine that day, we have to understand what would make the world say no. It won't happen overnight. There won't be a single dramatic moment where every investor sells all US bonds. Instead, it would unfold gradually, through doubt, through 1,000 small decisions. Maybe a central bank decides to buy fewer treasuries this year. Maybe a sovereign fund diversifies into Swiss francs or gold. Maybe energy exporters start pricing oil in multiple currencies instead of just dollars. Individually, these are small changes, but collectively, they signal a shift, a slow erosion of faith. As demand for US debt weakens, yields rise. That means the government has to pay more interest to borrow the same amount. Higher yields ripple through the economy. Mortgages, credit cards, corporate loans, everything becomes more expensive. The dollar weakens, inflation rises, foreign investors, seeing their returns eaten away, pull out further, and the cycle accelerates. At first, Washington would try to stabilize the situation. The Federal Reserve could step in, buying more treasuries to keep rates low. That's what it did during the pandemic. But printing money to buy government debt only works if people still believe that money has value. If inflation keeps rising, that faith evaporates. The world starts asking, if the US can print infinite dollars, why should those dollars be worth anything? In that moment, the world faces a choice, and history offers warnings. In the late 19th century, the British pound was the world's reserve currency. London was the center of global finance. But after 2 world wars, Britain's debts exploded. The pound lost credibility, and the US dollar replaced it. Before that, it was the Dutch guilder. Before that, the Spanish silver real. Every reserve currency in history has fallen when the empire behind it became too indebted, too divided, or too weak to maintain trust. The same could happen to the dollar. But here's the paradox. There's no obvious replacement. China's yuan is tightly controlled by its government. The euro is managed by multiple nations with competing interests. Gold is stable, but limited. Cryptocurrencies are volatile and politically unpredictable. So even as the world grows uneasy with the dollar, it can't quite escape it. It's like being trapped in a burning house with no exit. But imagine a tipping point, perhaps triggered by a political crisis in Washington, a sudden default scare, or a global shift in trade alliances. Major holders of U.S. debt, like Japan or China, might start selling treasuries in bulk. The value of those bonds would fall, interest rates would surge. The U.S. government, now paying far higher borrowing costs, would face a brutal choice: slash spending, or print even more money to cover the gap. Printing more would mean inflation. Cutting spending would mean economic pain. Either way, confidence in the dollar would shatter. The shock wouldn't stop at America's borders, because U.S. debt is the collateral for the entire global financial system. Banks hold treasuries as risk-free assets. Pension funds rely on them for safety. Foreign governments use them as reserves. If those bonds lose value, trillions of dollars in global wealth vanish overnight. Stock markets crash, credit freezes. The world faces a crisis not seen since 1929, only this time it's global and systemic. In such a world, countries would scramble to find alternatives. Some might return to gold, others to regional currency blocks. The BRICS alliance pushing trade in yuan or rupees, Europe strengthening its internal system, and digital currencies emerging as state-controlled substitutes. Global trade would fragment, capital would become national again, and the age of a single universal reserve currency could come to an end. For the United States, the consequences would be severe. No longer could it borrow cheaply from the rest of the world. The government would have to fund its spending through higher taxes or austerity. Military expansion, foreign aid, and global influence, all of it would shrink. The American century, built on financial dominance, would quietly fade into history. Yet crises also bring reinvention. If America's debt empire collapses, it might be forced to rebuild a real economy, one based on production, innovation, and balanced budgets, rather than endless borrowing. In a strange way, the day the world says no could be the day America rediscovers what real value means. But we're not there yet. For now, the dollar still reigns supreme. Even those who criticize it still use it. Even those who threaten to abandon it still measure their wealth in it. Because the truth is, faith in the dollar isn't just faith in America. It means faith in the entire post-war order. The global economy runs on the assumption that America will always be stable, always be powerful, always be the safest place for money. That assumption may last another decade or another generation. But every empire, every currency, every system built on trust faces its reckoning eventually. And when that day comes, the world will have to answer a question it hasn't asked in 80 years. If not the dollar, then what? Maybe that's the real danger. Not that the world says no to America, yes, debt, but that no one is ready for what comes after. Thanks for watching. What do you think the future holds for the dollar? Let me know in the comments below. And if you found this video insightful, please hit that like button and subscribe for more content just like this.